BHP Billiton is rejecting suggestions it'll break up fertiliser company Potash if the hostile takeover is successful. The mining giant says it's standing by its $40 billion bid as a fair one and wants the whole of Potash Corporation, not just a few parts. But many think BHP will have to up the price and that the extra debt they take on to finance it will force a sale of some of the assets sooner rather than later. I'm joined live in the studio tonight by Nigel Lake, Joint CEO of the corporate advisory firm Pottinger. Nigel Lake, thanks for being here.
Pleasure.
How likely is a deal?
Look, that's a good question. It's the $40 billion question. It may be a $45 or $50 billion question before this is over. If you think about what would make BHP pursue a transaction like this, clearly it's a very large cross-border hostile bid. Those sorts of transactions are very unusual. So they will have thought through the strategy very carefully, and I think what they've said today, that they will keep all the assets, fits very much with their stated strategy for their business as a whole.
I'll get to possibly what's going on behind in BHP's mind in a minute, but many analysts are saying that BHP will have to break Potash up if it gets up to $50 billion or even higher. Is that the case?
I don't necessarily agree with that, I have to say. I think what BHP is known for is long-run resources assets, running them efficiently and at low cost. This is very much a first-class business in all of its activities, and so I think from BHP's point of view they would clearly want to own it and run it for the long term. In terms of funding, this is entirely financed by cash, this transaction so far, so it's supported by something like $45 billion worth of funding lines, and of course money is still relatively cheap in the US at the moment, and this is all funded in US dollars.
So Pottinger is an advisory firm. If you were working for Potash, what would you be saying to them?
Look, the common question in these sorts of situations when a bid arrives, perhaps unexpectedly, is there's a lot of homework you wish you would have done beforehand. Now, I think in this case you can see from the speed with which they've reacted that they had done a lot of homework. They were able, within a very short space of time, just 4 or 5 days, to be in a position where they were happy to put out a really robust rebuttal of the proposal and put in the public domain they'd received that bid, and really say very firmly no.
It seems there's been a bit of a battle going on between the CEOs. You've obviously got Potash saying, no, I'm not going to accept this deal. You've got BHP saying, look, it's a fair one. Is there sort of an element of theatre going on with these negotiations? Because even though you said Potash was prepared and reacted quickly, before the deal its share price was languishing. The company wasn't doing as well as many shareholders would have liked.
Look, that's a great question. And I think you've always got to keep in your mind what are the motivations of each of the parties in this. If you're BHP and you've just tabled a very large bid, of course you want to say that this is good value for your shareholders. You need to say it's good value for the other side shareholders. If you push too aggressively the strategic importance for yourself and that it's great value for you, then of course the other side will want you to increase your bid.
And the CEO of Potash is out to gain a certain amount of money if this deal goes ahead.
Absolutely right, and that's not uncommon with US corporations where there can be very significant incentives in place. It's worth just talking about the Potash share price. It has been as low as $50 in recent times. It was as high as $125 just back in March. The all-time high is about $250, so there's a very, very wide valuation range. I think if you're BHP, this is a cash proposal, so they have judged the value of this asset in isolation from market movements, and they have said that they believe $40 billion is a fair price, but that's been pretty roundly rebutted by the target.
So that's around $130 a share. So if it was at $50 billion, if the offer went up to that, BHP is saying that the offer they've made is a fair one. How are they going to pull it off? What do they have to do?
Well, the stumbling block there will be renewing their financing lines. The financing amounts to about $45 billion. They may be able to find additional resources or conduct some small equity raising to help raise funds for an increased bid. There was a poll over the last few days of investors in Potash which suggested that they would need to increase their bid to just over $160 a share. So that is exactly the $50 billion mark.
So, look, is the deal too diversified for BHP? You've had Rio Tinto saying we're miners, not farmers. While obviously they have to actually mine potash, their image, Potash's image, is more of an agricultural company. Is it quite a diversified field where BHP is going?
That is a very interesting perspective. I think if you look at BHP's business currently, something like just over half their revenues come from activities which are very exposed to carbon pricing risk. So this is things like coal and iron ore and petroleum. Just over 70% or about 70% of their profits come from those sources. This acquisition, of course, would bring a significant new revenue and profit stream, which was not caught up in all the risks associated with climate change and carbon pricing risk in quite the same way. Now, BHP hasn't said anything publicly about this, but you'd imagine this must be a part of their thinking.
So it's almost, is this a new avenue that we're seeing the miners go? How will this help them with the possible climate change costs if they go down this path?
Well, I think it's an important growth avenue which is not exposed to the price risks in the same way. The world population is currently just under 7 billion. It's forecast to increase to just over 9 billion by 2050. And food production over that period of time is expected to increase by about 70% because of a move to people eating more meat as economies become wealthier. So that will drive a huge input in demand for agricultural production because, of course, the cows eat grains, etc., and that in turn drives a need for inputs to primary production.
Is this the start of a new way of thinking for the really big miners like the BHPs and the Rio Tintos?
That is one of those questions where you would love to be a fly on the wall in the boardroom. Certainly, there has been little debate in Australia really about climate change, certainly in the last couple of years. But behind the scenes, certainly we see, and from some of the work we've done at Pottinger, companies are exploring these issues. They are starting to think about how they can set a strategy which at least mitigates risk, even if they're doing that in a very quiet way.
And particularly now with the hung parliament and no one knows where it's going to go, but it looks like that climate change could well and truly be back on the agenda.
That is a great irony of an election campaign where I think many people on both sides of politics really complained about a lack of clear policy from either side. The spotlight has been focused very much back on things which I think are important from a long-term point of view, such as climate change, national broadband network and the like.
So as an advisory firm, if you were advising BHP this time, we mentioned potash, what would you be telling them about how they can convince their shareholders that it's right to buy a Canadian fertiliser company?
Look, I think the argument's here around an area where there is very solid growth prospects over the very long term. They will clearly have looked very deeply and carefully at valuation from the outside. There's been some comment around a hostile bid and lack of due diligence. And remember, there's a lot of information in the public domain about the quality of these resources. And probably the biggest item you're thinking about is what is the long-term pricing prospects for potash. You've seen across a whole range of agricultural industries in recent times that prices have been relatively low, notwithstanding the outlook, which is for significantly increased demand for all sorts of primary production over the long term.
Well, Nigel Lake, we'll leave it there, but it's something that everyone will be watching closely. Thanks for joining us tonight.
My pleasure, Bridget. Thank you.